Hello, and welcome back to Explain the Charts, your go-to channel for clear, data-driven market analysis. Today is October 3rd, 2025, and we have a massive day to cover for Bitcoin, which has decisively cleared the $120,000 level. In this video, we'll first break down the major news and macroeconomic events fueling this powerful move. Then, we'll jump into a detailed, multi-timeframe analysis of the BTC charts to identify key levels and potential price paths. The biggest headline is obviously the price action itself, with Bitcoin hitting a two-month high around $120,400. This rally appears to be driven by a confluence of factors, starting with the macro environment. The U.S. government officially shut down on October 1st, and historically, investors often flock to assets like Bitcoin as a safe haven during times of political and economic uncertainty. Adding fuel to the fire, recent weak economic data, like a significant decline in private payrolls, has strengthened market expectations for further Federal Reserve rate cuts, which is generally bullish for assets like Bitcoin. We are also seeing incredible institutional demand. Spot Bitcoin ETFs have seen massive inflows, with BlackRock's IBIT ETF alone absorbing nearly $24 billion this year, creating a significant demand-supply imbalance. This institutional hype is echoed by firms like MicroStrategy, whose Bitcoin holdings have now surpassed $77 billion. Analysts are understandably bullish, with Standard Chartered upgrading their forecast to $135,000 and others eyeing $150,000 or even $200,000 in the coming months. However, it's not all one-sided. Some on-chain analysts are warning of a potential October crash below $100,000, citing post-halving fatigue and whale selling. From a derivatives perspective, open interest is at an all-time high, with a critical liquidation level identified at $121,300 for shorts, while a huge cluster of longs are vulnerable below $118,000. This sets the stage for potentially explosive volatility. Now, let's see how all of this translates to the charts. Here we have the daily chart for BTC, showing all the price action since mid-2024. We can clearly see the major corrective wave that found a definitive bottom in early August 2024, right around the $49,000 level. This marked a significant reversal point for the market. From there, price began a steady and impressive recovery, methodically building a strong base of support in the $50,000 to $60,000 range throughout September of last year. The real acceleration phase began in late 2024, culminating in a massive and high-volume breakout in November that propelled Bitcoin into new all-time highs above the psychological $100,000 mark. After reaching a peak around $108,000 in December, we entered a necessary multi-month correction and consolidation period throughout the first half of 2025. During this time, price established a very strong long-term support zone around the $80,000 level, successfully defending it in both March and again in July. The subsequent rally was powerful, taking us to our previous local high of around $124,500 in mid-August, a level that now stands as the most critical resistance we are facing today. Let's zoom in on the price action from August of this year to now to get a clearer picture. Here is that crucial August 13th peak, just shy of $124,500. Following that rejection, we saw a sharp pullback of over 15% and a period of consolidation throughout most of September. During this phase, price found solid support around the $108,000 to $110,000 area, building cause for the next move. The key event on this chart is the powerful breakout candle on October 1st, a massive green candle that perfectly coincides with the news of the government shutdown and weak economic data. This single-day move sliced right through the horizontal resistance in the $115,000 to $116,000 zone. This former resistance level should now theoretically act as a strong area of support on any potential pullback. Currently, we are trading in a tight range just below that major resistance from the August high, making this a critical decision point for the entire market. Switching over to the 1-hour chart lets us analyze the structure of this recent impulse move with more granularity. The rally on October 1st and 2nd was very healthy, with a clear series of higher highs and higher lows, indicating strong buyer control. We can see the price is now entering a period of sideways consolidation after testing above the $121,000 mark. This is healthy price action as the market digests the recent large gains. For the immediate short term, the area between $119,500 and the psychological $120,000 level is the first key level of support to watch. A definitive break below this could signal short-term weakness and see a test of the support down at the $118,000 level. As we know from the news, $118,000 is a significant liquidation zone for long positions, so holding this level is critical for bulls. To the upside, immediate resistance is the recent high around $121,100, with a break above that targeting the major daily resistance. Drilling down to the 15-minute chart gives us an even closer, real-time look at the current price action. We can see a very tight range has formed over the last several hours between roughly $120,400 and $120,800. Notice how the volume has tapered off significantly during this consolidation. This type of low-volume consolidation following a strong upward move is often interpreted as a bullish continuation pattern, suggesting the market is simply pausing before another leg up. However, it can also signal buyer exhaustion, so we need to wait for confirmation. A decisive, high-volume break above the local resistance at $120,800 could signal the start of the next push higher toward the daily highs. Conversely, a break below the immediate support around $120,400 could lead to a quick drop to test the lower supports we identified on the hourly chart. Coming back to our daily chart for the big picture, the market structure remains overwhelmingly bullish. Price is holding firmly above all key short-term and long-term moving averages, a classic sign of a strong uptrend. Furthermore, the recent breakout occurred on significant volume, which adds validity to the move. The key test, and the only thing standing in the way of much higher prices, is whether we can decisively overcome this final hurdle at the $124,500 peak from August. So, to recap the important price levels we absolutely need to be watching. Our primary resistance zone is right above us at the August high of around $124,500. A break of this level opens the door to analyst targets at $135,000 and then the major psychological milestone of $150,000. To the downside, our first key support area is the zone between $118,000 and $120,000. This area is crucial because a break below it could trigger a cascade of long liquidations. Below that, the old resistance between $115,000 and $116,000 is the next major support zone to watch for buyers to step in. A catastrophic failure of that level would bring the $105,000 support into focus, which would represent a major trend reversal. Now for some potential scenarios based on this data. The bullish scenario, which I would assign a 60% probability given the powerful macro tailwinds and institutional flows, involves price breaking and holding above the $124,500 resistance. A daily close above this level would be extremely bullish and could trigger a short squeeze given the high open interest, leading to a rapid move towards the $135,000 level within the next few weeks. The bearish scenario, with about a 25% probability, would see a strong rejection from the $124,500 resistance, forming a potential double top. This would likely be followed by a break below the critical $118,000 support. Such a move could trigger those cascading liquidations we talked about, leading to a sharp correction down to the $115,000 area. Finally, a neutral, sideways scenario has a 15% probability. In this case, Bitcoin simply ranges between the support at $118,000 and resistance at $124,500 for a while, building energy for its next decisive move. Things to watch for in the coming days are simple: volume and news. Watch the volume on this test of the highs. A breakout on high volume confirms bullish intent, while a rejection on high volume would strengthen the bearish case. Also, keep a close eye on news related to the Federal Reserve's upcoming meeting and any further developments with institutional ETF flows, as they will continue to heavily influence price. That's our complete analysis for today. Please remember, this content is for informational and educational purposes only and should not be considered financial advice. The cryptocurrency market is extremely volatile and carries significant risk, so always do your own extensive research and develop your own risk management strategy before making any investment decisions. If you found this breakdown valuable, we would greatly appreciate it if you hit the like button, subscribe to Explain the Charts, and share your thoughts on Bitcoin's next move in the comments below. Thank you for watching, and we'll see you in the next video.